This is episode 1102.
We have, in finance, I have about 130 employees, and about 30 of those are financial planning and analysis. And so what we've done, and we actually went through a pretty large reorganization in 2021. I took over the CFO position at the end of 2019, and then in 2021, we kind of underwent a metamorphosis in FP&A. And so I have, a senior vice president of FP&A, and then what we've done below her is organize it into, I would say, essentially teams that are serving the largest components of the business. And so I've got a corporate FP&A function that kind of does the storytelling and the performance reporting and all of those standard items. And then I've got blocks of people. So our IT organization's pretty large, so they have a dedicated team. And then we've got dedicated teams serving our personal lines product management. We have a commercial segment that I didn't talk much about. That's $1 billion in revenue. So I have a dedicated team for that.
When Andrea Hecht walks into a finance meeting, she's not preparing for earnings calls or shareholder Q&A. Instead, her focus is inward, on aligning every financial decision with a mission that begins and ends with AAA members. We're technically owned by our policyholders, says Hecht, who is today CFO of CSAA Insurance. That difference in ownership structure and stakeholders reshapes everything from Hecht's financial priorities to the rhythms of her leadership communications. You'll hear about that and much more on today's episode. Our talk with CFO Andrea Hecht begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
And hello, we're speaking with Andrea Hecht, Executive Vice President and CFO of CSAA Insurance Group. She today steers finance, investments, ERM, and tax. She's climbed the ranks at CSAA, being its former controller, and she was an ex-auditor. CSAA today has over 4,000 employees and more than $6 billion in revenue, more than $7.6 billion to be exact. Andrea, welcome.
Thank you. Thanks for having me.
So, look back in time for us, Andrea. You've had an interesting career, some real important milestones, of course, when you joined CSAA. But take us back in time. Who were you back then? What were the experiences you feel pointed you down this track?
Yeah, it's a great question. And I really took what I would say is kind of the typical path for an accounting major out of college. So I started right out of school in public accounting. I was with Ernst & Young for about 13 years. And then I actually left EY to go to a smaller firm. At the time, it was called BKD. And I really loved public accounting. I loved the variety that it gave me. I was definitely focused primarily on insurance, but towards the end of my tenure at EY, had a lot of opportunities to see a lot of different companies and a lot of different industries. And I liked that variety. I liked, the client service aspect of public accounting. And so it was great. I got to go to a smaller firm and I was going to help them really jumpstart their insurance practice. They were moving, they wanted to build out their offices in Columbus, Ohio, which is where I'm originally from. And so I left to go to BKD to do that and to help with their insurance practice. And it was interesting, about 5 months into my tenure there, I got a text message from a former boss of mine at EY, and I hadn't heard from him in years. And he mentioned, he's like, "Hey, you wanna grab a drink when I'm home for Thanksgiving?" And I just remember thinking, "Oh no, he's going to offer me a job in California. What am I going to do?" And it was actually, he offered me the chance to go through the interview cycle for the controller position at CSAA at the time, back in 2017. And I ended up actually obviously getting the position and kind of took the leap of faith to leave public accounting, which I really, really did enjoy and found mentally stimulating, and packed up my house and moved across the country to California, and the rest is history, so they say.
Wow. So it looks like you needed something of a nudge finally. Why so long? And what was your criteria? You give us a sense of it, but what was your criteria about leaving Ernst and Young? What was it that you were looking for? Were you too careful? What were you, what were,
It was one of those things that's kind of at the precipice of, are you going to make a career out of public accounting, or are you going to do something else? Are you going to try to get to that partnership level? And at the end of the day, I think it was kind of a blessing for me. I got passed over my first time in the partnership process, and that's where I left and I went to BKD because I thought, well, maybe I'll have a different experience at a smaller firm doing this work that I really, really liked. And then I realized, if I either had to say this is going to be it, this is going to be what you do for the rest of your career, or you don't get that many opportunities to interview at a vice president level for places. And so I'm glad I left when I did. I think it made the transition into, more of a corporate America easier for me because I got to learn a lot about the operational aspects of running an accounting department that you don't really see in public accounting. Public accounting gives you a lot of really great experiences, and I tell everybody there's no day that you're going to waste in public accounting because of the experiences that you get. But I think it would have been a lot more difficult of a transition to go from controller to CFO than potentially from, a partner level in public accounting to CFO because you just don't have that operational experience.
tell us something again, serving clients, because we've had quite a few finance leaders reflect on their client serving days, and they often mention it as a key attribute that helped inform their leadership in some respect. Do you look at it?
I absolutely do. And I think, it's hard because when you're in public accounting, you're the revenue function. You are the thing that is creating the business for the company. And then when you go into a corporate environment, you are now a cost center and you're driving a different kind of value. And so I think having that client service aspect and mentality when you're working with your business partners just brings a different level of partnership, and it gives you a different level of influence in your day-to-day role. And so that was one of the things too that I heard a lot when I was going through the interview process for the CFO position was that relationship with finance was missing and it needed to be built. So having that client service background really served me well in building relationships with my peers and throughout the organization when I took that step from controller to CFO.
I want to ask you about CSAA, the nature of the business and what have you, but I want to stick with your career and this person who stepped into the controller role there. Can you share with us, that early chapter with CSAA? What did you experience exactly? Was the CFO role, did you think it was, or were you already aspiring to it? Was it something like, well, maybe?
Oh, of course, I was aspiring to. No, it was a great transition for me. I'm not sure if I had gone to a different company, I would have had such a good transition. One of the things that really I learned over the course of my time in public accounting was that culture is just such a huge part of a company. And you can kind of sense the culture when you walk into the lobby of a building, right? You interact with people and you can see just how everything's laid out. And one of the things I realized when I walked into the building at CSAA for the first time for my first round of interviews was it immediately just felt like a great place to work. And so that made the transition much easier for me. I think one of the things that I was surprised about is that, and I tell people this and they laugh, is there were a lot of things that I deeply cared about at EY in the work that I was doing as an auditor. And you get into a corporate environment, and I will just say that what you care about in a corporate environment differs greatly than the things that you learn in public accounting. So that was a bit of a transition for me. I think the other thing that was very, very different for me, as you can imagine, was just the work-life balance that all of a sudden I had. And, you go from working many, many, many hours every week and being driven by your billable hours to all of a sudden being able to really be thoughtful about the things that you're doing and think about things from a strategic perspective and really focus more on building those relationships as opposed to just trying to churn out work products. But to answer your second question, I said in the interview process when I was interviewing for this role that I wanted my next role to be at the company, the CFO position. So I was broadcasting very early what I ultimately wanted.
At the same time, is CSAA, it's a different type of organization, just given the fact that, and explain it to us, it's privately held, it's part of a subsidiary of the AAA?
Yeah, it's a great question. So we are a property and casualty insurer. We write in 23 states and the District of Columbia, and we sell AAA branded insurance to AAA members. So it's a little bit different because we're not publicly traded and we're not owned by shareholders. We're technically owned by our policyholders. And so we distribute nearly exclusively through AAA clubs to AAA members, which is really great. You think about the AAA brand and what a trusted brand that is in the United States. And it's very different being a membership organization. We can make decisions that are driven for the benefits of our members as opposed to just thinking about things from a value optimization perspective for stockholders. So it's been a great experience working at somewhere like this where the AAA member is really first and foremost in our minds on every single decision that we make.
So they are the stakeholders. I'm wondering, as a CFO, it would be interesting to learn how you dedicate your time, compared to a CFO of a publicly traded firm or a CFO who has private equity partners behind them. Where does Andrea dedicate extra time to communicate and show them the health of the business? Who are you revealing it to, the policyholder?
It's actually great because we don't necessarily have those traditional, we don't have those earnings calls that you do quarterly with public companies. You don't meet with to your point, you don't meet with your private equity investors. Our biggest rating agency is AM Best, which is, the traditional insurance rating agency. We actually just went through our ratings review with them. But part of the way that I think about my communication is primarily inward with the organization. And so it's working with my business partners to make sure that every decision that we make is deeply tied to our strategy, and our strategy is deeply tied to serving AAA members. It's really interesting for us because our biggest state and our largest concentration is California. And so obviously anybody who follows the news sees the California insurance news almost daily. And so we're looking at constantly trying to figure out how to serve the most members that we can in California while still protecting our surplus and equity of the insurance company. So it's a really interesting balancing act. And it's been really gratifying to see what we can do the last few years when other companies were pulling back from California.
You mentioned the rating agency. I mean, relationship. Can you share with us what makes that special? How is it different from other types of relationships?
Yeah, it's interesting because AM Best has been around for over a century, and they are the ones that are really looked at as the premier rating industry in insurance companies. And so, we communicate with them periodically, but they are they are an independent third party that is there to ensure that they're providing the best information that they can to stakeholders throughout the country. So it's a little bit different just because you don't have shareholders asking you questions. It's a much different relationship than that. It's much, I would say, you don't have as many touch points throughout the year. But, we deeply care about that rating because that speaks to our financial strength, and you want your policyholders to know that you have, extremely good financial strength.
And what is is there a cadence with how you communicate with them, though? Is there quarterly?
Yeah. So typically you go through ratings review annually. So we meet with them in person and we kind of show them what we've done for the last year and our results. And then we go through an independent ratings committee there where we have our analysts presenting to the committee. And, if there's things that happen throughout the year, they will reach out or I will reach out. Obviously when the Los Angeles wildfires happened, they were reaching out to ask what kind of exposure we have and understanding in the interim what large events could be impacting our financial health.
Would your finance organization be designed differently then? Just given your stakeholders are different, as we've been discussing here, what attributes might it have that other finance organizations don't?
Yeah, I think the one major thing that's different is we don't have the traditional investor relations function. Other than that, I would say it's probably it's still your fairly standard finance organization from the perspective of organizationally. We obviously have a very large financial reporting group. We have a lot of requirements with our state regulators. So that might be a bit bigger than you would expect it to be at a company that doesn't have those regulations. But I would say outside of the absence of investor relations, that's really probably the one thing that we don't have.
Can I ask you about your FP&A team and how you've organized it?
Yeah, sure. So we have in finance, I have about 130 employees, and about 30 of those are financial planning and analysis. And so what we've done, and we actually went through a pretty large reorganization in 2021. I took over the CFO position at the end of 2019. And then in 2021, we kind of underwent a metamorphosis in FP&A. And so I have, a senior vice president of FP&A. And then what we've done below her is organize it into, I would say, essentially teams that are serving the largest components of the business. And so I've got a corporate FP&A function that kind of does the storytelling and the performance reporting and all of those standard items. And then I've got blocks of people. So our IT organization's pretty large, so they have a dedicated team. And then we've got dedicated teams serving our personal lines product management. We have a commercial segment that I didn't talk much about. That's $1 billion in revenue. So I have a dedicated team for that. And then I have operational, essentially shared services, and the group that serves our claims functions, which is a huge part of an insurance company, as well as our policyholder service functions as well. And so it's kind of got dedicated teams for business lines.
The dedicated teams, would you describe them as being embedded? Do they report directly? There's a dotted line, of course, back to you, but maybe they're very much involved with the.
Yeah. And it's interesting because I always ask my peers how they do this at their companies. And so we're almost the flip of that. So they report directly into the SVP of FP&A, but they have a dotted line essentially to all of my peers. And so, the best situation is where you've got my team sitting in all of the leadership team meetings for, the various business units. And we have that here. It's been great. My peers are very open to having my team be a part of their team, which I think obviously not only helps from a relationship perspective, but you get the information up front and directly from the source. And so, you're not getting pulled in after the fact when, you could have helped influence things sooner if you had been at the table. So I think that's the most important aspect from my position, is making sure that those people, my team, has a seat at the table in the other divisions, which they do.
I couldn't help but notice that your CFO tenure began just as the pandemic was arriving. Now, you're not alone.
That was fun.
If you're a newbie CFO in that role, and we've had a lot of discussion around the pandemic and the response, but I just want to point out you're one of those CFOs.
Yeah. Oh, yes.
Took the office and then this man in your lap.
Yeah, I had 3 months in the role before we essentially broke to work remote.
One lasting lesson from that? I mean, is there some when you look back now, we've all tried to glean things from it, but for you and your leadership,
it's interesting. Obviously, I would not have chosen to do it this way. I think it made it much harder to do that, to make that transition into the C-suite. I think the thing that I tell everybody, and it's still true today because we are still largely a remote company, that's something that we've embraced and will continue to embrace. You have to try so much harder and make so much more effort to create touch points. I am not I'm really good, like if I'm in the hallway with you or I can swing by your office, but it's so much harder to translate that into a virtual environment. And so you have to put 10 times the effort into building relationships, and going through that transition. And it made it even one of the things I really took away from it. Everything I had heard when I went through the interview process for the CFO position was that finance wasn't involved in things as they were, or as they should be, or as people they say they wanted them to be, but I'm not sure anybody ever wants finance involved. But that is a really difficult thing to do virtually. And so you've got to hire the right people. You've got to really insist upon being in the right meetings, and you have got to try so much harder to build relationships. So it was definitely an interesting 12 to 18 months at the beginning.
Without a doubt. I want to just have a question just regarding the wildfire exposure that continues to reshape the California homeowners market. How is that impacting this business, and is there a response to that?
Yeah, I think it's obviously a huge impact, particularly if you write homeowners in California. We're fortunate. We are focused primarily in the northern half of the state. One of our sister companies within AAA writes in the southern half. So we had very little direct exposure. But, you've heard a lot about fires in California over the last few years, and we've had a lot of exposure to those. I think the one thing that really sticks out for me from a CSAA perspective is that, you have got to be really, really disciplined about how you underwrite these policies. But I think bigger than that for us is, and this is, I think, a difference in being a member organization too, we're not going to leave California, but we want to stay and try to be part of the solution. And so one of the things that we really try to do is look at innovative ways that we can shape the wildfire risk. So we've made investments in funds that are, attempting essentially to help clear out the forests. We communicate with all of our policyholders about how to be wildfire safe, what to do to your house to harden it against wildfire. And we really try to work with our policyholders to try to be part of that solution and not perpetuate the problem in the homeowners industry in California.
Yeah. With AAA membership, if I understood correctly, it's sort of the core of your distribution. Where do you see the greatest growth runway going forward? Is it auto? Is it homeowners? Is it emerging?
Yeah, I think we're definitely a home and auto company. For us, we have really good member penetration in California. We would like to continue to increase member penetration outside of California. The AAA member is a great insured. I mean, these are people that are spending $90, $100 a year for a product that they hope to never use, but they don't want to be stuck on the side of the road. So they buy this product for when they need it. So these tend to be really high quality insureds. And so we are definitely looking at ways to expand our member penetration outside, think Nevada, Arizona, Utah, and then out on the East Coast as well, which helps us, obviously grow the business, but helps us from a diversification perspective too, because we are so heavily concentrated in California.
Want to talk about your lines of sight into the business today, and whether over time there are certain measures or metrics, that perhaps weren't on your dashboard 3 to 5 years ago, but they are today. Are there, can you share with us what numbers, as things evolve rapidly, as you are able to see into the business more deeply, perhaps, can you share with us any numbers or metrics that you're tracking closely these days that are new or different?
Well, I would say we do a lot of what you would expect if you were an insurance person. I think one of the things that's really made itself very clear over the last few years, and we definitely looked at it before, but it's top of mind for everyone, is the relationship of capital that's needed to support the business versus the actual capital that we have. And I'll just explain a little bit more. So obviously, when you write a homeowner's policy in anywhere or auto, you want to plan for a very bad day. You want to make sure that you have the equity necessary to cover your losses when you have a very large event. And so, obviously, for us, our largest events are wildfires. But we're trying to do much more of a balancing act between capital that's used to support a policy in California versus capital that might be needed to support a policy in Ohio, right? Very different risks, very different just ways to underwrite that business. And so that's been something that we are hyper focused on, is just ensuring that we've got the right capital metrics in place to make smart underwriting decisions.
And has that, over the last 12 months, have you added any new measures to that? Have you weighted any of the measures differently?
I would say one of the things that we're doing, and we've always had this measure, it's kind of our internal metric. We call it our economic capital ratio, and we run all sorts of scenarios and do math and say, this is how much we need to really focus on a really bad day. And so that's something we've been much more, I would say, direct about communicating to the organization, because everybody always asks, well, what's your surplus target? Are you trying to say I want $1 of surplus for every $2 of premium? And it's much different than that. And so that's something that we're really trying to get people focused on, is that we're not targeting a surplus number, or what we call surplus in insurance. It's really equity. We are targeting this ratio to make sure that we can pay claims on a bad day and have buffer left over. And so that's been something that's been a huge focus of ours that we've been talking to the board, key stakeholders, and our company about.
We'd like to touch on AI with you. We're wondering how AI is part of your, impacting the strategy here.
Yeah, that's a great question. My answer My answer yesterday is probably different than the answer today, which will be different than the answer tomorrow. So yeah, we've really tried to embrace generative AI in a responsible manner. I mean, clearly, I kind of call it, there's two different buckets of AI from my seat. There's productivity tools that many of us are starting to use every single day, like ChatGPT, Writer.com, Copilot, and then there's thinking about different ways to transform the business. And so one of the things that we're looking at is, one of our largest bucket of costs are our claims costs. Obviously, we're an insurance company. We pay claims every single day, right? So how do we use generative AI to help make that process better and more efficient? And when we say more efficient, we're not talking about replacing people. We're just trying to make those people more efficient in their day-to-day, jobs. And that's an area too where you have so many claims that you're handling every day that if you can use generative AI to help you not make mistakes, that'll be hugely, hugely beneficial to the bottom line. From my seat, I would say, just holistically looking at generative AI, one of the things that I'm focused on is trying to make sure that value propositions are there. I think this is an area where your investment dollars could really, really eclipse your value proposition if you're not trying to do it smartly. And so we're trying to keep it somewhat focused on key initiatives, while still ensuring that people have the tools that they expect to have. Obviously, I think generative AI is one of those spaces where people are going to expect that they have those things to help them do their jobs every day. And so you can't fall behind in that area, but it's a balancing act for sure.
We'd like to always ask about the build versus buy.
My favorite conversation.
Yeah. There are a lot of insurtech vendors out there, and I'm sure there are lots of AI tools that they would love to sell you. But what guides your decision when you develop something in-house versus buying one of their?
Yeah, it's interesting. We as a company for a long time, and I mean like decades, had very much, I would say, a tilt more towards build. And I think what we're learning is that to be quick and to figure out how to adopt things quickly and get them in service quickly and really be more efficient, you've probably got to look more at the buy functionality, while ensuring that you're getting the best tools out there. I think the best thing that you can do in this type of decision is you can't have, I would say, IT by themselves making this decision. You've got to have the business at the table, really driving the business requirements IT understanding what it is that the business needs and then figuring out if there's a tool that you can easily buy to help meet those requirements. And I think that's where people sometimes get sideways is I think many times people think that they can build things that you could probably easily buy.
In a lot of companies, it seems like the department heads and sort of the regular budgeting back and forth, department heads would come and say, well, we're really happy we got those 100 licenses for those LLMs. But meanwhile, we do want to make a dozen hires in the coming months. And, finance might be like, well, let's see how we leverage those 100 licenses over the next 6 months. And then maybe we talk about those hires. Does that reflect some of the thinking within?
Yeah, I would say that's definitely fair. I think it's a hard balancing act. You've got to have the right people internally to help you figure out the tools to buy and how to deploy those and how to most importantly maximize the value that's being driven out of those tools. But at the same time, you know, I am a finance person, so I know anybody who wants to ask for headcount or any project out there is going to want headcount. And so what we've tried to do, I would say internally here is the executive leadership team has come together on multiple occasions to really put together a generative AI strategy. And then we're trying to let the strategy guide the decisions below. That's not to say it's perfect. There's certainly been friction with regards to how quickly we're going to deploy some of these things and how many people to hire. But I think that we're at least trying to keep it somewhat confined and then figure out as we successfully deploy a few of these things, how that looks when it's scaled, if that makes sense.
I'm curious about fraud detection. I imagine that's one of the areas where AI could lend a helping hand. Can you help us better understand how AI might be useful?
Yeah, it's great. So, obviously AI can help with unstructured data. I think a lot of companies have their arms around structured data, but then you get into unstructured data with videos and tools that can help you look at social media and things like that in the claims area. And so we've deployed this project, or we're in the process of building it, called Virtual Claims Assistant. And I would say what it's trying to do, or what it's designed to do, is really point claims adjusters, not necessarily towards fraud, but that's certainly something that's out there, but it's trying to help them identify claims earlier on that need the most attention. And that doesn't, again, necessarily mean fraud. That just means this is a really complex claim. This looks like another claim that we had where it didn't go well in the settlement. Or even the other thing that it does is it helps claims adjusters and service agents essentially be more focused on the insured that's calling in. And so, providing that empathetic customer experience, because you've got your AI doing note taking and things like that on the side. And so anything that can be used to help really facilitate that claims process, make it more seamless, and really try to show that you care about the person that's calling you. Fraud detection is certainly something that's good and it can be helpful, but we're trying to use it in a lot of different ways, not only in fraud.
Your AI investments, do you have a philosophy here when you sort of oversee and green light budgets for these types of investments? What?
Well, I think that even goes beyond AI, right? Everyone's got good ideas all the time, everywhere. So how do you prioritize these things? We actually have an internal council that's it's not our entire executive leadership team. There's 5 of us that serve on it. And people have to go through this council to get things funded, their projects funded. But broader than that, we spend a lot of time together as a group looking at the pipeline of projects, and this includes generative AI, and looking at the things that are most closely tied to our strategic priorities. I think where you can go sideways in funding this stuff a lot of times is if you don't have a clear strategy and you don't have certain things that you're trying to accomplish, every project can look good on paper. Every project could potentially have a good return, and it could have a great business, outcome. But that being said, is it really something that's tied to a strategic priority? And so that's one of the things that's kind of our guiding principle when we're thinking about funding and prioritizing projects, generative AI and other projects.
What comes to mind when we ask for a finance strategic move?
Yeah. So to me, finance is there to support the business. And so one of the things that pops to mind, it was actually during the summer of 2014, and we had just come off this incredible growth period. So we ended 2020 with essentially 4 billion of premium, and we've grown to 7.5 billion at the end of 2024. And if you talk to any actuary out there, they'll tell you the quickest way for an insurance company to fail is to grow too fast. And so we were at this precipice in 2024 of, can we continue to grow, or should we do things to slow down that growth? And the insurance market itself is somewhat a commodity. You have to have insurance, and competition is high. I know you probably turn on your TV, you watch sporting events, and 90% of the commercials that you see are insurance commercials. And so, were we going to be able to take advantage of this moment in time where we were growing our policies so much, or were we going to have to slow that down because we weren't sure that we had the capital available to support the business? Going back to the question of public versus private, we're a private company, and our options for growing our capital or doing debt financing or things like that are much more limited than a public company or even just a traditional company that's owned by shareholders. And so it was that point in time where we kind of had this epiphany that we had to do something to grow our capital base to support our top line growth. And so we actually went out into the market and we got this very specific debt instrument that's specific to insurance companies called a surplus note. And so we were able to raise $500 million. And what that's been able to do for us is, first of all, we came at it from a period of strength. We had good financial results, and we weren't waiting until something went south when we may not have been able to get investors at the table to underwrite this note. But we also didn't have to slow down our growth plans as much as we might have if we didn't do it. And so we are able to continue on our growth trajectory now. We're planning to, eclipse that $7.6 billion that we had at the end of 2024 because we executed that note in Q1 of 2025. So that to me was a pretty proud moment for the partnership between the finance team and capital management team and the business, because we were able to successfully go out and market a pretty large surplus note in comparison to some of the others that you see in the industry.
Well, great insight for us there. Thank you for that. We want you to return to the end of 2019. We had already touched on your early COVID days, but we like to ask, when people take the office for the first time, there must have been something that didn't occur to them or they didn't expect, even though you'd been perhaps working closely with your CFO for years. There must have been something that you felt like, I wish I knew this. Anything come to mind?
Yeah, I think one of the things that really jumps to mind for me is that if you look at somebody running their business unit, or if you look at, your general counsel, they have to be subject matter experts in your domain, in their domains. And the CFO obviously has to be a finance expert. But I think to be really successful in the CFO role, you have to have really, really deep knowledge of every aspect of the business. And so when I think about when I was stepping into that role in 2019, particularly, on the IT side, I mean, we have insurance companies are very technology driven. I had to get really deep in IT very, very quickly. I had to get really deep in underwriting really, really quickly. And I just had to learn all of these different aspects in a much more deep level than I had before. And I think that to me was kind of like a light bulb moment of, oh my gosh, like you have to understand everything that everyone else is doing. I think the other piece that really pops to mind is, finance people at the end of the day, we're presenting numbers, but we are storytellers. And if you can't do storytelling in a finance role, you will never be able to influence the way that you need to, because you've got to make stuff real for people. And you will be more successful as a company when all of your employees have at least a basic working knowledge of how the decisions that they're making every day translate into the financial statements. And I think we take that for granted sometimes as finance people because we live and breathe it every day. And it's not so obvious to the other, 3,900 people that work here.
Your emphasis on storytelling there, I find interesting because I'm like, well, where did she get it? Where was that experience for you? And I'm sure it was during your tour as a controller, but did it come, did the client serving aspect of KPMG, was there a storytelling opportunity there for you to sharpen your skills? Or
Yeah, at EY, yes. When you're in public accounting, essentially, your second or third month in, like all of a sudden you're starting to train other people. You don't get to sit in your corner in 3 or 4 years, learn your job, and then move into a people management role. You're responsible for people management almost like within 3 months because you've got interns coming in now, right? And so you've got to really figure out how to break things down into really basic terms and train people. And then also, I was very lucky. I got to start going to audit committee meetings very early on in my career. And many times you're talking to people who aren't necessarily finance people in those meetings. And so you've got to figure out how to balance the tops of the waves with enough detail for people to really appreciate the circumstance. And so I think it was just years and years of training people and honing that skill that really helped with the storytelling aspect.
Yeah. Putting that narrative forward. We'd like to ask our guests to reflect a little on that personal side for us. What is one thing or something that many people might not know about you? Is it an interest that you have, a pursuit that you had, a sporting chapter early in?
Oh gosh. I mean, it's funny. I'm pretty, I'm an open book, but I always laugh when I say that. I'm a very introverted person, and it is very uncomfortable for me to do things like this. And right? I always tell people that I'm like, I'm very introverted, and people are like, no, I don't believe it at all. And it's like, I just hide it well.
What does that mean exactly? We all have that conversation, but introverts shut down in certain.
I think it's just how you get your energy. If I on a Friday night, I am very happy being at home with a book and my husband and my 4-year-old, and I'm the quintessential. I will agree to go to a party and then dread it right up until the minute that I leave.
No, it's such a contradictory sort
Yeah.
of thing. What about it? Was there ever a resource or a book that influenced your thinking along the way? It doesn't have to be a book. It might be just a resource of some kind. Or you just mentioned escaping with a book. Maybe there's something you escape with that you'd like to recommend.
Yeah, it's funny. I was thinking about this. I love reading, and I read lots of different things. And I will say I read for fun more than I read for work. I always preface it by saying that. There was a book that one of my colleagues recommended to me once that I read. I actually read it to my kid when he was a baby. I would read to him before we went to bed, and I was like, well, when he's 6 months old, I'm not going to read kids' books. I'll read good books for that I enjoy as well. So I read this book. It's called The Leadership Moment, and it's really interesting. It basically dives into 9 or 10 different examples or stories of people who demonstrated leaderships. There's a couple bad ones intermixed in with the good ones. But a few of the stories really resonated with me. And I actually used one of them in a company-wide presentation a few years ago. But it's different moments of resiliency and different just ways that people showed up in leadership and sometimes very stressed scenarios. So one of them is, Eugene Katz, who was in charge of Eugene Krantz, who was in charge of the Apollo 13 mission room. So he's, a character in that movie. But it was just really, it resonated with me. Lots of different examples and lots of different ways to show up from a leadership perspective.
Yeah. Is this I'm wondering if this is here, the Leadership Moment, 9 stories,
Yep.
True Stories of Triumph and Disaster by Michael Unseen.
Yes.
Unseen.
It's a great book too.
Yeah. Yeah, great. We haven't had it before, so
Oh, good.
always great to get a new selection. Yeah, thank you. We are up to our final question where we're going to ask you to look forward finally, and we're interested in your priorities for the coming 12 months as a CFO. What would those priorities be?
So I've got three that are really top of mind for me. So we actually just unveiled a new strategy. So we have a CFO that's about a year and a half or 2 years into his tenure, and so at the end of last year, we went through the whole process of updating our strategy. And so I'm really looking forward to the financial plan for this year and making sure that that financial plan is just in lockstep with that strategy to support that strategy and that we're going to achieve that strategy. The second one that I'm focused on, because it's actually a project that's owned by my team, is we're doing a large digital payments transformation. So I always joke and I say insurance companies need to be really good at two things: paying money and taking money. Like those are the two things you cannot mess up. And so we're updating our whole digital payments infrastructure, and we're really delighting the customer doing the digital wallet and revolutionizing that space. And then the third is back to a topic that we already discussed: generative AI, and just making sure that we are at the, I don't know if we want to be at the cutting edge necessarily, but we definitely want to be towards the first mover space and doing it responsibly from a finance perspective.
Andrea Hecht, thank you for joining us on CFO Thought Leader.
Thanks so much for having me.